Hey guys, just wanted to do a quick video on the hell of AMC options chain coming for us in January. This is just going to be absolutely terrible if somebody's shorting AMC stock. I don't know who that would be, but being kidding. Um, there's a lot heavy volume on the options chain, and to me that's what caused the melt up and the squeeze in January was a series of about 2 weeks of gamma squeezes leading up to the short squeeze. So I just wanted to quickly go over. I had to just quickly go over, volume and open interest. But volume is just any given day. This is the number of options that are traded on these particular contracts. And the open interest is the number of contracts that are currently held. So even at $28, we had a lot of options a good amount of options that went in the money. But then for December 31st, we have quite a bit more, even at $29.30 and $31. And the point I'm trying to make is that as the price increases, even if it's a couple of points each week, all those contracts that are at that same price for the following weeks, all of those get in the money. And then it just creates this snowball that just grows bigger and bigger and bigger. And after a while it gets big enough that when they start delta hedging for all of those options, now if they're short the stock at the same time they're in a gamma squeeze, then they're going to end up losing. I mean, unless they can manage to stop the gamma squeeze, that's the only way they can do that. It's either you stop the gamma squeeze, which is the day that you're supposed to go out and hedge because you wrote naked calls. You can either short the stock, which I've seen them do, is on a Friday or actually a Tuesday Wednesday time frame. They'll short the stock in oblivion. I saw it on Casasava Sciences a couple weeks back, where a ton of options went in the money on a Friday. I'm talking like 30 points worth, and the stock would have absolutely blown up. So what did they do? Somebody put up 4 million shares to short. They shorted the stock down about 20 points, and then the stock turned into a nothing burger. But that was the only way to do it. It's either you pay up or you got to figure out a way to short the stock to get all those out of the money options that went into the money back out of the money. Otherwise, you got to pay up shorty. There's just that part of the market is immutable. Like you can't go in the money and then not pay or go out and delta hedge for those shares. So and the part of the problem is that we are coming from such a depressed price in AMC right now that it's a lot of the I mean, we're coming from down here. So, here on December 14th, we have a nice price increase. We have a nice price increase here on the 17th. And then, we get up a price increase into this $30 range. Well, there's tons and tons of options that come in here in this price range, up to 32, $33. Even a point makes a huge difference. And the thing that causes the most problem is the stair step on the way up. It's not the rapid rise in the stock price and then at the following Friday the stock is down below where it started on Monday. It's the constant price increase that causes just so much pain. Even if it did something like this and it took 2 to 3 weeks of consistent price increases, following on a Friday, so all the money options go in the money on a Friday and the stock stays that same price, for the whole week, and then on Friday you have more that go in the money. This is what is going to build the ultimate pressure cooker against the short sellers is these consistent price movements right here. And that's what I'm watching this options chain real close. Is there's tons of contracts. So but if you go up even a couple of points, you get thousands more contracts that go in the money. And this is only for December. January is hell. The only way that they have out of this in January that I think is to keep the stock completely flat. There is no other. I mean, you would have to. The stock would literally. I mean, it would just have to be. And I apologize right now if you're on a mobile device, you can't see this, but we would just have to have a giant nothing burger month, an absolute flat nothing burger month in AMC, and the likelihood of that happening is just it's almost, there's no way to do it, I don't think, because you have very strong algorithms that want to buy at this price point right here. And especially if you get up into that $30 range, there's some algorithms that want to buy right there. So it's terrifying for if if you're shorting a stock. This is usually where they're, and you can see it right here. They're going to short it all the way down in here, and then in here they're going to switch. You'll see it in the options chain too. You'll see them switch from puts to calls, and they'll reverse, and they'll rip back up, and then they'll short the stock. And nobody knows except for the guys with the big money where the stock's going to turn around, and then they'll go short again. But that's just how these works. It's a huge moneymaker for people that write options. They'll short the stock all the way down, they'll turn, and they'll rip the stock up, and then they'll write a bunch of naked calls up here, and then they'll come down here and they'll write a bunch of puts, and then they'll write a bunch of naked calls, and it just continues on like that indefinitely. And that's at the same time, that's one thing that's beautiful about a computer algorithm, is you can make it go long on the stock, write the calls, invert immediately, rip the price down, short it, and make sure all of those calls that you wrote expire out of the money worthless. But there's very strong buying algorithms that unless they have the ability to short against these strong buying algorithms in this $30 range, I don't know how they're going to get out of this. This is the biggest pressure cooker. It's just like the other January before, where they're up against the options chain, and the only way to do it is just to bury the stock in this $28 range for the rest of the month, and to get they would have to expire all of the January calls out of the money, completely worthless, below $32. And there's just, and then we'll quickly go through the options chain for January. January is absolute hell, and we'll go through that real quick. So yeah, lots of open interest even at these low price points. And then you go to January 14th. January 14th isn't as bad, but that'll switch when you go to the next week. All of these open interest and all the volume will change. Just like tomorrow, the volume will change on these, and the volume for December 31st, you'll see how the volume change. I mean, this is absolute hell. If for any reason they get up here in $34, they've got thousands of contracts that are going in the money. Especially these $30 strike, tons and tons of volume. That's just crazy. And that's what, I won't try to repeat myself, but it's definitely a huge problem. And January 21st is a nightmare. Look at all these $30 contracts that are held that they're going to have to deal with. I mean, this is just $35 contracts, $40 contracts, 56,000. If for any reason by then it's at $40, I mean, man, that's uh, if I was a market maker, I wouldn't even want the stock at $30. I would want it to close at $29 at January 21st. And the likelihood of that happening is maybe. Maybe you pull a Hail Mary. I mean, they'd have to squeeze it somehow in a couple of days, get everybody to sell, and then somehow get away from these January 21st options. Because this is terrible. This will create a cycle of infinity against a short seller because they'll end up covering. And then you have all these options that go in the money. And then you get more price increases. Um, I mean, this is, and that's why I call it this is the month of hell. I don't. I love looking at this because it's absolute insanity the amount of option strikes out here. Yeah, oh, these January 21st 145s, 171,000. And we've seen this before. I think it was back in August where there was some horrendous number of 145 strikes that people were holding, and they did expire out of the money. And that very well could, here's the 60s, here's the 45s. I mean, this is the most. If you get price increases in this stock, it's terrible. At $40, 56,000 for January 21st. Yeah, January 21st is just it's terrible. And you know what's funny is after that, the options chain is just a big nothing burger. It's garbage. I mean, this is peanuts. You could get a big melt up and price increase up to January 28th, and then you get a good price increase somewhere in here where you wouldn't get another cycle of options going in the money. Of course, all of this will change because, say for instance, you're January 21st, and you're like, oh well, I'm gonna buy some options for the 28th. So this whole options chain will explode by the 21st comes around. The 28th will be insane. Not nearly as bad as these 21st ones. Either way, guys, I'm I'm also I've been very skeptical about price movements in AMC, and I'll tell you, I guess, why. Um, oh man, I just don't know how to use this yet. I'm just really bad with. But here in this area, I'll just do this crappy drawing here. I saw on the ticker because I watch it pretty much every day. And I don't remember what it's called. They're not spoofing, but basically they're not filling orders. And what they did is the stock would have gone up much, much higher in these two areas and in this one. And I think that they were like, hey, we don't want to get squeezed right here. We're going to try and do whatever we can to short the stock. But basically, they were having to heavily short into this algorithm that was buying here. This is a very strong algorithm. At this 3382, there's an air gap in here. If you look at like VPVR, volume by price, if you get to that 33 $34, once you get to $34, you see this jump. It's called a jump the creek right here. And if you can't see that, I'm sorry, but basically there's a huge jump from 34 up to like 36. It wants to just the price will just, you'll see it just at once it gets 34, 36, 38 is very, very easy to do. But it's also inverted. When it comes back down, it can go from 38 to 34 just as fast. And you see that in here as well. 38 to 34 is very easy to fill. that I honestly think somebody's going to get screwed at $35. Somebody's the it's they're I'm done. They're going to say I'm done. Doesn't mean the big guys will, but I think somebody's gonna abandon ship at around $35. Just in my opinion. But I've seen them fight these areas several times like that, where pretty much you see the price wanting to come up, and then it gets shorted down into. And they're doing everything they can to keep the stock price from a certain level, because I don't think they have the margin requirements anymore for the stock to get up above these areas. I mean, maybe it will without some kind of major pricing movements, but and it could be they're just delaying this long enough to where they can go up and not get totally squeezed. And that's possibly what's going on, is just it's just delay, kicking the can down the road, so that when the price does finally move up, it's just a price increase and it's not a squeeze. And a lot of people have been talking about that. That's very dangerous for them. I don't know. There's one guy I was watching, and he was like, I don't know why they would want to do that, because there's so many unknowns when you get up to over $100, $80. Nobody knows what's going to happen. I mean, you could have some big whale come in and be like, you know, see you later. I'm going to buy at the ask and just blow your short position out of the water, and then the real squeeze will happen. There's so many unknowns there. So either way, guys, I don't mean to take up any more of your time, but this is I am very intrigued, and I'm always excited and hopeful for AMC, because the on balance volume doesn't lie. People are buying the stock. There's the demand for the stock is there, and that's what I look at. That's my biggest thing is somebody shorted a stock that people ended up wanting to buy it, and now it's going to come down to either everybody leaves, or the thing gets you get a pretty significant price increase because the short sellers just give up. I mean, they're going to run out of money. I will note that SPY, all the indexes are crazy high, and if you see a dip, that's my other kind of indicator. Is if I start seeing dips in S&P, Nasdaq, stuff like that, you'll start. I'm just I'm guessing we'll see some pretty serious activity, because the rest of the market is sky high right now, and all the I hate calling them meme stocks, but we'll just call them meme stocks right now, are in the tank. They're they've been shorted into oblivion. The prices are in the basement, and I think what you're going to see is a complete seesaw effect, where right now the blue chips are up, and it's just going to switch. You'll see everything else crash, and then all the meme stock stuff and all the biotech stocks that were shorted into oblivion, like an Ocugen, will explode. It's it's money. You can't. It's immutable. You can't just. It doesn't just disappear in thin air. It ends up in somebody's pocket, and that's like the stock market. It's a zero sum game. You get somebody wins, and on the other side somebody loses. And I just don't know how they're going to get out of this. I will be very impressed if they're able to get out of the month of January with keeping around the $28 or less. Maybe they could keep us range bound. Um, maybe, maybe. Either way, I'm excited. Well, I'll keep doing some more update videos as if we get some more movement in the stock, and looking forward to this week. See you guys.